In this video, we will look into the different stock market players and other corporate entities related to stock market which come under the regulatory authority of SEBI. We will discuss them in detail about what role they play in the stock market. First one is rating agencies. The major task of rating agencies is to rate the credit worthiness of corporate and the governments. They do so by assigning various levels of ratings to a particular instrument like government bonds, corporate bonds, treasury bills, etc. In simple terms, with the help of credit ratings, if a corporate or a government entity wants to avail a loan, the rating agency checks if the entity is worth giving the loan. Some of the examples of rating agencies in India are CRISIL, ICRA, CARE, etc. Debenture Trustees. Debenture trustees act as a trustee to the corporate debentures. Now what does this mean? In simple terms, when the companies want to raise a loan, they can issue debenture against which they promise to pay an interest. These debentures can be subscribed by the public. A debenture trustees ensure that the debenture obligation is honored. Examples of debentures are almost all the banks in India are debenture trustees. The next is depositories. The main job of depositories is to safekeep, report, and ensure settlement of client securities. In other words, depositories act as a vault for the shares that you buy. The depositories hold your shares and facilitate exchange of your securities. When you buy these shares sit on your depository account, commonly known as the Demat account. This is maintained electronically by only two companies in India, which are NSDL and CSDL. Depository participant. Depository participant act as an agent to the two depositories. In stock market, you cannot directly deal or rather trade with NSDL or CSDL. You need to liaison with the depository participant to open and maintain your Demat account. Most of the banks and a few stockbrokers are depository participants in India. Merchant bankers. Merchant bankers help raise money in the primary markets. That is, if a company plans to raise money by floating an IPO, then merchant bankers are the ones who help companies with the IPO process. Some of the examples of merchant banks are Axis Capital, Kotak Capital, Edelweiss Capital, etc. Mutual funds are also known as the asset management companies. An AMC or a mutual fund collects money from the public, puts that money into a single account, and then invests that money in the markets with the sole objective of making the investment grow and thereby generate wealth to its investors. Investors can buy units of mutual funds by investing in a very small amounts regularly in the form of SIP or invest a lump sum money. Details about how mutual fund works will be covered in the further videos. Portfolio Management Scheme, also known as PMS, this term was very famous after the movie Scam 1992 based on Harshad Mehta's stock market scam. So what is Portfolio Management Scheme and what is the role of portfolio managers? PMS works similar to a mutual fund except that in PMS you have to invest a minimum of 25 lakh rupees. However, there is no such cap in a mutual fund. Some of the examples of PMS are Religare Wealth Management, Citibank Portfolio Management, etc. Stockbrokers. Stockbrokers act as an intermediary between an investor and a stock exchange. So whenever you want to buy or sell shares from a stock exchange, you have to do so through registered stockbrokers. A sub-broker is like an agent to a stockbroker. Some of the examples of stockbrokers are Zerodha, ICICI Direct, Sharekhan, etc. So that's it for this video. For more learning videos, do subscribe to the channel and happy learning.